In retirement, taxes are a significant portion of what gets deducted in your overall funds. Making sure that you aren't taxed more than you should be is important, and knowing how you can take advantage of your state's tax laws is adamant in having a well-funded retirement. Because of that reason, it's quite the advantage to live in a state that's tax-friendly towards its retirees. While that may not be the only consideration for retirement, it's still one of the bigger ones affecting your overall financial health. This is Intelligentsia, real-life advice for practical and financial goals. Today, we want to talk about the different types of taxes in Colorado, the significance of tax revenue for the state, how they tax your retirement income, and other important considerations when talking about the state of Colorado. So let's get to it. Like most US states, Colorado also relies on multiple types of taxes to fund their everyday services and infrastructure. This can come in the form of income tax, property tax, sales tax, and a lot of other smaller fees. That said, tax revenue helps them out significantly and functions as a primary source of income for the state. Your tax dollars are generally used for a lot of different functions like education, healthcare, transportation, and other government services. Even if the state requires money to function, they still permit allowances in the form of tax reduction and other credits for those eligible. We'll talk about how the different types of retirement income are taxed. Let's start off by talking about income tax. Colorado is generally tax-friendly towards retirees when it comes to their Social Security benefits, as they don't tax Social Security income. This works well for retirees hoping to make their Social Security benefits the primary source of money for their retirement. While Social Security benefits in Colorado are exempt from retirement income tax, other forms of retirement income are not. For instance, pension income taxation in the state of Colorado varies depending on the source. The tax system in Colorado is somewhat complex, in which pension income from different sources are treated differently. For example, in the case of public pension plans like the Colorado Public Employees Retirement Association are generally taxable. Meanwhile, other public pensions like military pensions are fully exempt from state income tax. Other forms of retirement income sources like 401k plans, IRAs, and private pensions are also subject to Colorado's state income tax. However, there are still certain deductions and exemptions that you can apply for provided you are qualified for them. As of 2022, Colorado's state income tax structure is progressive. That means that the state's income tax goes up as your income increases, with the tax rates ranging from 4.55% to 7.15%. Retirees can also be eligible for deductions and credits that can help them reduce their overall tax liability. That said, income taxes do make up a bulk of what you're potentially taxed for. However, other important considerations when talking about tax liabilities are sales taxes. In Colorado, the state's sales tax is moderate, with some goods and services even being exempt from it. The rate at which these are taxed varies depending on your location, and as a result, it's important for retirees to gauge the location on where they'd like to retire. Which brings us to our next point, which are property taxes. Property taxes normally take a large part of retirement income to pay off, as it's considered a part of property expenses. Just buying a house is already a lot of money, but since you have to take account of various other fees and taxes, those all chip away at your retirement income. That said, property taxes on Colorado are primarily determined at the local level, instead of having a nationwide state tax rate. There are, however, tax credits and exemptions offered that we'll talk about later on in the video. Another important thing to take note of, in the event that you would like to leave your property to your beneficiaries or any other assets you may want to bequeath upon them, estate taxes should also be considered. Colorado is favorable for retirees because as of 2022, the state does not impose an estate tax or inheritance tax for retirees. Now that we've talked about the different types of taxes that you're likely to encounter in Colorado, let's move on to the various tax credits and exemptions that will save you a lot in tax dollars. While it's important to know how you're getting taxed, the next step is to know if you're eligible for tax reductions. After all, knowing what you're getting taxed for is one thing, but actually getting them reduced is another. Colorado helps out its residents through a variety of tax credits and exemptions to reduce their tax liability. Among them include the following: Senior Homestead Exemption. For seniors who are eligible and meet the criteria for this, they're allowed to exempt a portion of the value of their primary residence from their property taxes. To further alleviate retirees from property taxes, there's also the property tax deferral program for seniors, which we'll talk about next. Property tax deferral for seniors. Colorado offers a property tax deferral program for those eligible for it. This program aims to assist seniors financially by postponing property tax payments up until the property is sold or transferred. This means that they don't have to worry about their taxes until they decide to sell or transfer their property. This allows them the freedom to use their funds for something else and effectively helps them manage their finances better. Additionally, Colorado offers a state tax refund known as the Colorado Property Tax Rent, Heat, and Utilities Credit, or PTC, to eligible individuals and families. This program is designed to provide financial assistance to low-income residents. This is especially helpful for those struggling to meet their basic needs, including housing and utilities. It's not to be confused with the Earned Tax Income Tax Credit, or EITC, and it focuses primarily on property tax and essential living expenses. This is calculated depending on your income, age, and expenses you incur for property taxes and other important utilities used. This is meant to offset the financial burden for essential costs for low-income families or individuals. Income tax deductions. Apart from property tax assistance, Colorado also offers its residents various income tax deductions, especially for retirees. These deductions can include retirement income, medical expenses, and other related expenses. Sales tax refund. Retirees with low income may be eligible for a sales tax refund through the Colorado Department of Revenue. Colorado pension/retirement benefits exclusion. Some retirement benefits may be partially or fully excluded from states-wide taxes. These include pensions such as military pensions and PERA benefits. For the credits mentioned, the Colorado Department of Revenue is where you'll be able to find the specific answers for questions involving applications and eligibility. Colorado's tax climate is one of the many things to consider when choosing to retire there. However, there are other noteworthy financial considerations too. For instance, the cost of living coupled with sales tax for items that you would potentially need in your retirement adds up to your daily expenses. The quality of healthcare and other important medical supplies that you may need are also important considerations, as healthcare is one of the primary expenses that retirees usually pay for. Recreational opportunities to keep yourself satisfied are also different from county to county, and knowing what you'd prefer to live, apart from the changes in tax laws, are critical to take note of. To optimize your stay in Colorado, having access to a qualified tax professional is key to knowing more about the specifics per county. You'll also have the benefit of knowing which credits you're allowed to have and which tax deductions you're qualified for. In conclusion, knowing more about the state's various tax laws and the differences per county is important when it comes to choosing where in Colorado you'll be likely to enjoy your retirement the most. While some income sources aren't subject to taxation, like Social Security benefits, other retirement income are taxable, with the tax treatment varying depending on the area. It's fortunate that there are tax exemptions and credits available to Colorado's residents and are great for reducing the tax burden, especially when it comes to property and income taxes. Careful planning and consultation with tax professionals go a long way when choosing to make the best out of the opportunities presented and enjoying retirement in a comfortable manner in the state of Colorado. If you enjoyed this video and found us helpful, please hit the like and subscribe button. We'd like to be able to grow alongside you and we're pumped to have you in our next video. Stay mentally healthy and let's get financially fit together.